26 years of CNBC TV18.
26 years ago, CNBC TV18 went live and India's markets were a completely different universe. Even as we complain about how this has been a tough year, why not take you back 26 years to tell you the shape, size, structure and returns over this incredible period? Let's take a look at the massive reset which has played out. Let's look at the size of the market itself to begin with. From under 5 lakh crores when CNBC TV18 started to now over 470 lakh crore rupees in market capitalization. It's been a 100-bagger over the last 26 years. The number of companies listed has also grown nearly 5 times in this period, as you can see up on your screen. A look at the growth in trading activity in cash markets. Stunning, from about 1650 crores to about 1 lakh crore in terms of daily turnover. Perhaps the biggest structural change, the financialization of India. Mutual funds share in household savings has gone up. I found data for 2011-12 used to be about 0.9% to about 6% today. And of course, many believe that we're just about starting. From barely 20 lakh demat accounts in 1999 to more than 14 crore today. From almost no SIP culture, which is now the bedrock of all the money which is coming into the market. Regularly 20,000 crores every month. This is a market no longer owned by institutions, at least only by institutions. It's a market owned by India's households. Let's go back to the Nifty 50. The OG before the Y2K hit, right? 50 names that told the story of old India. And the names, I don't know how many of those names you recognize. Oriental Bank of Commerce was there in the Nifty. There was IDBI Bank in the Nifty and so many others. PSUs, lots of refiners, etc., etc. And that has changed. IT, private banks beginning to rise. Old-timers, of course, would recognize some of the logos up there. Cut to today, only 17 survivors on the benchmark. Basically, out of the 50 in 99, only 17 are there in the Nifty 50. And Reliance and others on your screen now. Let's take a look at the average. What did the average mid-cap, small-cap, large-cap look like in 99 and what it looks like now? What I've done is taken the current definitions of large, mid and small for comparison's sake. Top 100 is large, next 150 is mid, and everything 250 first onwards is small. In 99, the top 100 companies made up 87% of total NSE. Today, that number is 60%. The largest stock used to be HUL with a market cap of 50,000 crores. Reliance, of course, 3-month ended average market cap November is 19.5 lakh crores for Reliance. Mid-caps make 20% of NSE now, while back then they were about 9% of the NSE. The largest mid-cap used to be Gujarat Gas, 800 crore market cap. The largest mid-cap today is 125 times that by current definition. DRL with 1 lakh crore in market capitalization. Small caps now make up 20% of the NSE today. Guess what they were? 4% back, with the largest small cap being Foseco India, 150 crores in market capitalization. Today, ACC with 35,000 crores in market cap is the largest small cap. Markets ultimately follow earnings, and India's earnings story tells you why maybe this bull market has legs. And I've just divided this into phases. Between F505 and F510, EPS grew 11%. CAGR. Then came almost like a lost decade, F510 to F515, just 3% earnings growth. And of course, followed by about 6% from F515 to F520. And of course, COVID hit 20 to 25. We've seen a CAGR of about 20%. This is the strongest earnings phase we've had in about 2 decades or so. I will end with, of course, asset class return stable over the long term. As you will see, equities have delivered. The Nifty has compounded about 12% for 26 years. It's beaten gold, beaten bonds, and every other traditional asset class. So that's the last 26 years. Joining me now to talk about the next 26. My job was easy. I just had to document. But, their job is going to be slightly tougher. Madhu Kela, Nilesh Shah and Navneet Munot. Gentlemen, great to have all of you here. And thank you very much for being part of the CNBC TV18 journey. I want to especially thank all of you. I was saying this earlier, viewers turn to us for advice, and of course, we turn to you. And you always oblige, so thank you.
Thank you.
Many congratulations to CNBC family.
Thanks very much, Navneet.
Congratulations, Prashant, again to all of you. What a splendid job you guys have done to bring so much awareness and attract so many retail investors to be part of this journey. Yeah. And I hope this continues for the next 26 years.
And we kind of sometimes quibble and complain, but sometimes history helps, right? Historical facts kind of help to calm the mind that equities, as I said, have done well over a very long period of time, even if, I mean, it's been a tough year so far in 2025. So just wanted your reflections first up, and your one or two learnings, if I can start with that, and then we'll look ahead in terms of what the market may look like. Nilesh bhai, why don't I start with you?
So, 26 years ago, we were far more circumspect, and we were always looking east or west to figure out what will happen in India. The FPI activity was tracked very seriously.
Yep.
Their word was taken as gospel. Today, a lot of things have changed. We are far more confident. We do track east and west, but our markets are driven far more by domestic flows. The fear of FPI has gone. The confidence has come back. And hopefully, over next 26 years, this journey will just continue to expand. People will move from short-term to long-term, from speculation to investment, and indeed create their financial security.
You think the flows are here to stay? Local, I mentioned some of the numbers. Shift of household savings into financial assets like equity. Do you think it's just starting? How do you think about it, Nilesh bhai?
Yes, sorry.
So, प्रशांत भाई मतलब एक शेयर ढूंढने की कोशिश कर रहा था, कुछ इस तरह है कि मेरी ख्वाहिश से कुछ ऐसी निकली, but जितनी निकली कम निकली. Obviously, it's far better. But the reality is that when we look back, we all feel proud. 5 crore investors, 80 lakh crore AUM, real return to the investors. Urban, semi-urban, rural, upper class, middle class, lower class, everywhere we are there. And we legitimately think mutual funds sahi hai. But when I look at the potential, we have barely scratched the surface. Despite the excess, have I reached to the common man? The total investment in mutual fund will be about 25 to 30 lakh crore. Rest is mark-to-market gain. This is less than the currency notes in circulation. I am unable to convince an average Indian that currency notes will not give you return. Your financial security will come by investing appropriately. That journey of converting an average Indian from a good saver to good investor, we have taken few steps, but अरमा बहुत आगे है, ख्वाहिश है बहुत दूर है.
और अभी तो शुरुआत है.
And ये तो शुरुआत है.
Madhu bhai, tell us a little bit about.
So one of the biggest reflections, Prashant, if I look back my own journey or journey of capital market even 26 years back, are the real possibilities in financial markets. As Rakesh Bhaiya used to say, highs are much higher than what we can imagine in the markets. At least I would have not been able to emphasize that the market cap as a whole will go up 150x in matter of 26 years. And there will be companies which will go up like 100x, 200x, 500x, even 1000x in this time frame. So I think if you just step back and if you think that those are the possibilities which are there. So the mood question today is, are we done? Are those possibilities still exist for the next 26 years? I would say with conviction that those possibilities very much exist. Otherwise, what happens, and we are seeing that, what is happening in America, only on the AI field in the last 5 years is kind of demonstrating कि market कभी बूढ़े नहीं होते हैं. लोग बूढ़े हो जाते हैं, और markets कभी बूढ़े नहीं होते हैं. And those opportunities and possibilities exist. So one of the key lessons, at least for me, is when I look back, when I look for the next 26 years, is to really be able to capture the possibilities in the market. Right? You catch the right industry, which has got tremendous tailwinds, and within that, if you're lucky, if you can get the best entrepreneur, you're done.
Yeah.
Then you just have to sit tight.
You've given that example of internet as being the big wave and how much wealth that's created. And if you were positioned somewhere there in the right companies, I mean, you've made a tremendous
You
amount
made
of wealth.
tremendous clear. And the other thing which I would say, Prashant, is that, from a India perspective, let's say a lot of re-rating has happened. So if I may say that lazy investing, कि अपने पैसा डाल दिया और बढ़ जाएगा, maybe that era, according to me, is over. Now it is time to really work hard. You have to be able to bet on companies or sectors where there is real earning growth, because that is what will get rewarded. You are seeing already in last 18 months, if you are a lazy investor, you have been actually been
Easy
punished.
discovery part is...
Actually been punished.
Yeah.
In last 18 months, a lot of portfolios are down. So while India is story, India is happening. But it is not that you just put money and your money will be made. Last 5 years, post-COVID, that was the scenario. If you just invested in the market, you made money.
Correct.
But now is the time. You have to be able to bet on right companies, right... And the third point which I would like to put, I travel a lot. The real thing, Prashant, which is happening in India is entrepreneurship. I see, come from a small place like Raipur. I was just telling, there are 5 companies which will be making more than 1,000 crore profit in a place like Raipur. We have companies with 25,000 crore market cap, one company each. So the real entrepreneurship is actually happening. So the opportunities are really phenomenal, and they are happening in
And
tier
for viewers
2,
who
tier
are
3.
watching, all that will be captured in public markets eventually.
It will get. It is getting captured. The fact that every day there one new company is getting listed, and there is so much fancy about these new companies listing. A lot of it is coming.
And the coming of age of venture capital and private equity industry will also play a very big role in increasing that momentum. Now you have, like, as he talked about, like a lot of companies in a small town or in variety of sectors which are small today. There are private equity and venture capital guys investing today. And over a period of time, we have a beautiful public market where several of them will see a listing.
Just to take off Madhubhai's point, Navneet, in terms of what he said, right? Easy discoveries happen. And I think that discovery, and also, by the way, not just easy valuations have been, I mean, everything is priced in a way because there's so much money which has come in. So the investable universe has been discovered, discovered 2x, 3x. So, it's kind of gone up. So,
Can I counter that before you complete that?
Please.
So you showed a lot of those companies, and you go back in every bull market. Actually, 99 was a roaring bull market, and we saw a big crash in 2000. Market was sideways for next 3 years. We saw a big crash in 2008, 2013, 2020. Even if you invested in the right companies, at the peak of the market, several of them have multiplied money many times. So in late 90s, as I said, when you started, at the peak of the market, there are so many companies in the Nifty which have multiplied money over a period of time. India is a stock picker's paradise. I think what you need to keep a close eye is on finding the right business, right management.
So which means, does it have any implications for viewers who are watching in terms of how do you own India? You own the Nifty. I mean, is there any...
That's one of the ways, but if you look at the funds...
But as he's saying, that maybe you got to be more... I mean, I think what I'm taking away is you got to be more active. You got to be more...
No, not active. You have to be alert. What I'm saying you is that in the last 12, 18 months, and these guys, they manage multiple billions of dollars, so they will vouch even better. That just saying that I've invested is not making money. To be able to pick the right sector, within that to be able to pick the right companies is what is making money.
And that's why several funds have multiplied much more than what Nifty has multiplied.
Exactly.
And that's the reason. You talked about some of the names which don't exist, avoiding them, and there are many who have done very well.
Nilesh bhai, you're quiet.
See, investor has a choice. There is a public transport bus available. There is a chauffeur-driven Mercedes available. It's up to them which they want to choose. If you use public transport bus like a Nifty index, yes, it will also reach the destination, maybe little late. The cost is little less. But if you want an experience, there is active fund management available. And हम लोग कितना charge करते हैं? 25 पैसा, 30 पैसा, 50 पैसा, 75 पैसा. Including distributors, advisory fees and commission, it is 1.5, 1.75%.
Or a chauffeur-driven car.
Or a chauffeur-driven Mercedes, not a normal car. Luxury. And we have seen in last 26 years when markets have gone X, funds have gone 2X, 5X, 10X, 20X. Choice is yours. But at least please sit in the car so that you reach your destination. You need to be financially secured. Our parents' generation, we were their retirement solution. We may think we have done a good job, their opinion could be different. But why should you become a liability on your kids? Please secure your financial freedom. Whether you choose index fund, whether you choose active fund, your choice. But please sit in the...
1 minute. I just want to make one point. Again, learning out of 26 years, and I was just looking at data. Fixed income actually has given you 6.5% CAGR in last 26 years. Equities reinvested by dividend has given you 14.5%, right? If you reinvested the dividend. So this thing which is put in our head, that fixed income is the biggest security, to my mind is the biggest myth. Fixed income is not proven to be a fixed security. Bank deposits have not proven to be a security. Because see, if you have not been able to even beat inflation, what are we talking about? You have actually lost money by keeping money in the bank, in real sense.
Yep.
On the face of it, it may look like it is being safe. But if you look at what is see, there are two kinds of losses you make, Prashant. One is the financial loss, which is very easy to compute. The bigger loss, which is hidden, is the opportunity loss. What I'm trying to say, people have not realized what kind of opportunity they missed by saying that yes, because we have invested in bank deposit, we are safe. You calculate yourself. What would have happened if you invested 1 lakh rupee in equity 25 years back and you invested 1 lakh rupee in fixed income? It would have made difference of crores and crores of rupees.
Absolutely.
And it's an important point because life expenses, expectancy and expectations are increasing. And that's why you need to save more and save longer for...
Although I would say Nilesh Bhai will say that when he was managing the fixed income business, he beat equities. Huh?
But that was a different time. That was 16%. In 2000, repo rate was 16%. And you were getting interest of maybe in peak of 2000, repo rate was 16%. At that time, if your inflation was 6-7%, you're still making 17% in fixed income. Yes. That was great time to invest in fixed income. But now the pendulum has reversed.
At the right time.
Exactly. As always.
I want to get to...
As always. He always at the right time.
This multi-asset funds, right? You think they make more and more sense? It's been a year where multi-asset has done very well. Although Madhu is saying that maybe multi-asset, I don't know if what you said...
I am saying, Prashant, multi-asset will do well, but you will need to be alert. I am just saying, don't be a lazy investor. Absolutely. That's all I am saying.
I want your perspective. For viewers who are watching in an actionable way, I mean, pure equity versus a multi-asset kind of a product, from here on, what's your sense?
So it all depends upon your risk-return profile and your investment objective. If you can do allocation on your own, then you can choose between equity, debt and precious metal on your own. If you don't want to do asset allocation, then give that responsibility to the fund manager. They will decide between debt, equity and precious metal. Now, last year, precious metal has done exceptionally well, and which is why multi-asset allocation funds have outperformed equity. But that's not the reason to invest. You are investing because you believe fund manager will do a better job in terms of asset allocation.
I just feel awareness about these kind of multi-asset kind of funds have also really taken off in the last 2 years, 2.5, 3 years or so. Right?
Whenever performance comes, awareness goes up. We want the other way around.
Navneet?
No, the last thing one should chase is like the recent performance of any sector or theme or particular asset class. And that's why we always advise investors to have a proper asset allocation in place. It's very important.
Whether you do it yourself or you hand it over
to the fund manager. And we have the best products in the industry. As an industry, we have come out with many hybrid funds, many asset allocation products where investors can put money in the one fund and get all the asset classes exposure.
Let's talk about themes as we look forward. I'm not asking for specifics, but big themes. Where, I mean, this is the set you should focus on.
Prashant, I will only talk about one thing. We are talking about 25 years, right?
Not necessarily 25. But
I'm saying 25 years. We are talking about a larger context. Correct. What can really change?
Correct.
So I think then let me make a distinction. When I talk about AI, I'm not talking about investing in AI companies. I'm actually bearish on a lot of the American AI companies because I feel in the short term there is a clear bubble out there. In the long run, they may still do well, but in the short term, I clearly see a bubble. But AI usage is going to transform many companies, many industries, many entrepreneurs. So if we can really identify companies where AI usage is going to either scale up their business or going to bring in efficiency, I think that's a real game changer. So on one hand, if you have pricing power, which you don't have to actually pass on to consumer, and let's not fool ourselves that it is available to whole world. Yes, everything is available to the whole world, but there will be people who will be early adopter. There will be people who will move in early and they will encash on this opportunity over the next 3-5 years. And I'm really, really bullish. We are actually working on this theme that wherever, and this is where you will get real multipliers. So this is one thing, AI usage.
But the way it will translate is basically productivity goes up, margins improve, and
and also the scale goes up.
Yeah.
Because of the AI usage, also the scale goes up.
Sure. Any sector in particular?
It happened in the internet boom in 90s. The world invested in fiber and internet capacity, but India was the biggest beneficiary. Several of the companies benefited so much from the internet, apart from the IT services companies, and now you are seeing a new set of companies which are building on the digital public infrastructure and ubiquitous broadband.
But just to narrow that point, Madhu,
financial stocks. For instance, detecting fraud was such a big issue for last 25 years in the financial companies. Now you see all the major banks are actually starting to use AI to detect frauds because these are same patterns which gets followed up, right? So maybe financial stocks come, and there will be companies which will still go back and say, "Theek hai, dekhte hain, karte hain," and there will be companies which will be very aggressive. And you are seeing what is happening in AI usage in China. So it is not like we are living in some other world. If you just see what has happened in China and just watch companies which are aggressively adopting those usage only in financial sector, I think there's a lot of money to be made.
You can kind of make that case here. Nilesh bhai, big theme.
So apart from what Madhubhai said, companies which will leverage technology to deliver cheaper, better and faster solutions to their customer, and they'll have to be better than their peers. But the real theme over last 26 years we have seen is betting upon entrepreneurs. Technology was available to every single IT company. Few were winners, many were losers. Similarly, in banking and financial services, licenses were given to many players. Few created history, few became history. So it's all about entrepreneurs, entrepreneurs, entrepreneurs. And apart from many other things, the crucial thing will be governance. Last 26 years, we have seen entrepreneurs who didn't follow the dharma of governance have failed to create sustainable value for investors. And the narrative of governance is changing. What was right yesterday is not appropriate today, and you need to go one step further. So focus on entrepreneurship, but entrepreneurs who are following the dharma of governance.
Well put.
Beautiful.
I think companies with a growth mindset and having the nimbleness and agility to make the most of the macro opportunity and the tailwinds that we have for the next 25 years will do very well. I think there are opportunities in resurgence of manufacturing in India, indigenation in many sectors, and also where the consumer wallet will go. This will go more on caring, compounding, and convenience. These are the three places, and you can see where the consumers are going to put their money. And I think many sectors, many companies will be big beneficiaries of that.
Of this trend. You know, we can go on and it's a wonderful chat to have all of you here, but, the tyranny of time on television. Thank you very much, Navneet, Nilesh bhai and Madhu bhai for dropping by. Thank you for being a part of our journey over the last 26 years and look forward to the next 26.
Thank you for having us and congratulations once again on all the best. Prashant.
Thank you for tolerating us for 26 years. Passing the same message, be a long-term investor.
Thank you very much.
Thank you so much.
Well, that's it. We slip into a quick commercial break. More comes up on the other side.
26 years